Well, good afternoon, everybody. Thanks for joining us for this very urgent webinar. This is not how I think any of us planned to be spending our Friday, and a happy Veterans Day for everybody who has served our nation. This is a very difficult conversation that we're having today. It is most unexpected. This Monday and Tuesday of this week were perhaps the most significant 48 hours in the entire history of crypto, certainly since the launch of Bitcoin itself. And to help us understand what has happened, how it happened, where are we now, what's going on next, I'm very happy to bring onto the program my good friend Matt Hougan. Matt is the Chief Investment Officer of Bitwise Asset Management. Matt is an expert in crypto, writes a column for Forbes on crypto and so much more, 20 plus year veteran of this industry. Matt, great to be with you as always.
Thanks for having me here, Rick.
Before we get in, I want to make sure for folks who are unfamiliar with Bitwise Asset Management, tell us a little bit about the company and the role that you all have in the crypto community.
Absolutely. First, wanted to join you in thanking our veterans for their service and our veterans' families for supporting those veterans as they serve. Obviously, this is a day to remember and reflect on that, so wanted to do that at the outset. At Bitwise, we're a specialist crypto asset manager. We've been in the market for 5 years. We manage around $1 billion in assets, primarily for financial advisors, family offices, and institutions. We run a suite of products. Our flagship is the Bitwise 10 Crypto Index Fund, which is the largest crypto index fund in the world. I think two things that distinguish us, Rick. We spend a lot of time on education. Along with my director of research, David Lawant, I wrote the CFA's Guide to Bitcoin, Blockchain, and Crypto. So we tried to provide balanced coverage of the real risks and opportunities in the space. And we are focused on the financial advisor market. Here's a list of our business development officers located in every region around the country that are there to answer questions that clients may have about what's going on in this market. So whether you're a Bitwise client or not, feel free to download this screen, and reach out to the person in your neck of the woods. They will help answer their questions or funnel it to my 10-person research team. I know you have clients who are wondering what FTX means, where crypto goes from here. We'll answer some of that on this webinar. But Bitwise exists as an organization to help financial advisors answer their clients' questions and gain exposure if they want to the crypto market. So please do make use of this resource.
And that is one thing that sets Bitwise apart. I can tell you all that from my experience in dealing with so many firms in this space, this network is really unprecedented. There isn't anybody else in the crypto community I'm aware of that does this kind of outreach and provides this level of service to advisors. It really is something to take advantage of. I also want to note that this is going to be replayed over the next week for a lot of folks who are unable to join us live here today on Friday. And so if you don't have the opportunity to get your question answered because you're watching the replay, you can email Matt directly. You can email any of his colleagues on that prior slide, but feel free to email Matt at bitwiseinvestments.com. He'll be happy to personally respond to your question, get you the information you need from his colleagues as needed. And with that, I want to really launch into this conversation, Matt. As we mentioned, this is the biggest deal, I think, the most significant 48 hours, Monday and Tuesday, since the launch of Bitcoin itself 14 years ago. And it's not good news. This is a really horrible situation that we have found ourselves in, and completely unexpected. We've been in a crypto winter for a year now, and it hit a low last May when Terra Luna collapsed. That was a $60 billion loss. And then we saw Celsius collapse with BlockFi, Voyager Digital, Marathon. This crypto winter has really had its casualties, but that was all since last May and June. And since then, Bitcoin has been trading in around the 20,000 range. It's been pretty flat, pretty stable for the past 6 months since last May. But on Monday, FTX, the world's second largest crypto exchange, owned by Sam Bankman-Fried, he announced that FTX is collapsing. And everybody's heard his name. He goes by the initials SBF. The FTX name is everywhere. Their logo was on the uniforms of the Empires of the World Series. The stadium where the Miami Heat NBA team plays is now called FTX Arena, $200 million deal. He's been on the cover of Time magazine. Fortune called him the next Warren Buffett. He and his top lieutenants just gave $70 million to 3 political action committees in this election of this week's, all supporting Democrats. Just a few months ago, he was the white knight of crypto. He was bailing out other crypto companies that were all collapsing. Now FTX itself is in a bailout scenario, which it doesn't look like is going to get. In just one day, the investors of his company, including me, by the way, full disclosure, have seen our investments wiped out. And the company today announced they're filing for bankruptcy. It's a shock to the whole community. One major fund, I got to read this to you, Matt, and everybody else. This is an email I got from one fund that had an investment in FTX. They said, quote, "We actively monitor and manage counterparty risk with our trading partners and vendors. As part of ongoing due diligence of FTX, we reviewed their most recent financial statements for Q2 and have been in ongoing discussions with the FTX team members in several divisions. Based on the information provided and our review, signs of distress were not apparent." Everyone was blindsided by this, Matt.
Yeah, that is correct. That is correct, Rick. You did a good job. The reason people were blindsided by it, because this was, or appears to be, we don't have all the information, something approaching criminally negligent fraud, right? It's hard to see fraud before it appears. Of course, looking back with hindsight, there are plenty of warning signs. This was a crypto exchange that was headquartered in the Bahamas. Sam Bankman-Fried controlled a parallel hedge fund trading arm called Alameda Research that was trading on that exchange and generating incredible profits. It was splashing its logos, as you mentioned, on the uniforms of umpires. Tom Brady, Giselle, others were backing it. These are all, in retrospect, warning flags. But what appears to have been happening is that this affiliated trading company, which was called Alameda Research, ran into trouble during the spring blowup in crypto alongside Celsius, Three Arrows Capital, etc. And rather than letting that unwind, what appears to have occurred is that FTX, the exchange, loaned customer assets to this affiliated trading entity, trying to backfill the hole that they stumbled into. Of course, that is a strict violation of the terms of service. Of course, it approaches or crosses well over the line of criminal activity. Exchanges are supposed to safeguard customer assets, such as if you put an asset on and then you want it back, you can get it back. And instead, they were loaned to this affiliated trading entity. This could lead to significant losses for those shareholders. There could be other systemic effects. And of course, it destroys trust in the crypto industry. I don't think, and I know we'll get into this, it changes the destination of where crypto is going, but it will take many months for this to cycle through the system and for the system to heal. There is no way of getting around that this is a negative event in the industry. We've seen them before. We've moved past them. We'll move past this one as well. But it is a shock. It is a high-profile shock, and it's a shock that leaves a hole in crypto balance sheets that may be $10 to $20 billion.
And we do need to highlight the difference between short-term and long-term. In the short term, as you said, this is as horrible a stain on the industry as I think anybody could have anticipated, with a huge implication. It's already created massive volatility in the market, and it has led to all kinds of commentary as more news continues to emerge from this. We saw Bitcoin fall radically on the news. It went below 17,000, and we have seen similar volatility in virtually all other digital asset valuations. We saw a dramatic rise the following day, but it is still in the negative today. And so talk about what you think is this means from a price perspective in the short run, and how long do you think the short run is going to last? So let's start there, Matt.
It's a great question. You have to think about the short order effects. What are the short order effects here? Well, one, you have a great deal of forced selling of crypto assets. Alameda Research, for instance, we think, aggressively sold crypto assets that were liquid on its balance sheet in an attempt to keep allowing redemption at FTX, because the idea that it could weather the storm. So that had an immediate downward pressure on prices. Now crypto is wondering what other investors have been impacted by this and maybe over-levered in the market, and maybe now are insolvent and will have their own forced selling. So that creates immediate negative pressure in the market. And then, of course, you have the fact that this destroys trust and therefore keeps investors who would otherwise enter at these prices because they're attractive long-term entry points. They're going to sit on the sidelines because they don't know what other shoes might drop. The one thing investors hate, Rick, more than anything else, is uncertainty. And this injects a great deal of uncertainty into the market. So, when you look at Bitcoin's price and you look at a chart, that $18,000, $20,000 range was a strong level of support. It had been trading there for a while. That was the highs in 2017, and it's broken down below that. So I think it's going to, be a volatile stretch toward the end of the year. It could be accelerated by tax loss harvest selling into the end of the year. And so, I look back at what happened in May and June. And what happened in May and June was a similar blow up style event. And I think it took 3 or 4 months for the crypto industry to fully heal from that and assume that it was in the past. You can expect that this will take longer. This could take 4 months, 5 months, 6 months until people are sure that the system has cleared, that there are no more shoes to drop, and start to maybe tiptoe back into the market. I think that's the kind of scale, and maybe longer than that we're talking about here.
And unfortunately, I think there is a lot of expectation that there will be more shoes to drop. This crypto winter is not yet over. A lot of firms are continuing to struggle. Bitcoin miners are struggling to deal with the high energy costs and the reduced Bitcoin price of their mining efforts. And they're facing in a year from now, a year and a half from now, a 50% reduction in the mining reward they're going to receive. At the same time, this is generating a whole new level of regulatory scrutiny. We're going to elaborate on that in a little bit. But that raises the further questions of resolving the uncertainty. Until we see what the new Congress has to say about this, we aren't terribly sure. We do know that all the current bills that are in Congress are out the window. They're all going to get rewritten. And the incredible amount of involvement that the lobbying effort has been on behalf of crypto are all going to be doors shut. So this really is a game changer in Washington as well. And that's going to further the uncertainty that we have going on. We'll elaborate on all that in a moment. What I want you to do first, Matt, is take us beyond that. Take us beyond the next 6 to 9 months. And let's look more toward the long term. Let's look at the next 6 to 9 years. Where do you think this situation today is going to have by the time we reach the end of the decade?
Yeah, let me say one note on the miners, and then that is a beautiful question. If anyone has positions in miners or is considering positions in miners, we did a comprehensive analysis of their balance sheets, their leverage levels, their cash on hand. And if you would like to see that analysis, please do reach out to me at Matt@Bitwise Investments. Be happy to share the direct spreadsheet that we calculated based on the most recent financials there. There are miners in strong positions and there are miners in weak positions. And so I think that kind of fundamental information may be valuable to you. So feel free to reach out. I love the question on the next 6 to 9 years because I actually, I don't want to sound Pollyanna here, but I think there is a silver lining to this, and you started to talk about it. This is going to catalyze regulators to come into the space aggressively and rapidly. To some degree, this shows that they already should have. One of the reasons that FTX grew so fast and was headquartered offshore is because regulators haven't provided clarity on how to regulate spot markets in the US. So US institutions who wanted to trade in this market were forced to go offshore for these more innovative exchanges. They didn't have an option here. So I think there is some blame to be shared on the regulators for moving too slowly. But what we're going to get out of this is a regulated crypto market. And I actually think that that is going to be one of the keys to moving crypto into the mainstream. If your thesis around crypto is that it's a fundamental technological advance, that it lets us do things with money we've never been able to do, that it will let us disrupt the financial industry in the way that the internet disrupted so many other industries, that it will let us create new cultural opportunities, you're fine with reasonable regulation. In fact, not just fine, you think that that is really important. What is going to get institutions to come off the sidelines now and tiptoe into the crypto market? It's going to be better regulation. What is going to make engineers think about what are the boundaries of the applications that they can develop? What are the limits of their creativity? Where can they go and where can't they go? It's going to be regulatory clarity. So, this is going to be a difficult period for crypto. And on the other side of it, I think is the cycle of crypto where we go mainstream, where we have regulatory clarity, where we look back on this as the Wild West days of crypto. I'm excited for that future, but there's a lot of work to be done in Washington. I'm pretty hopeful with what we're seeing in terms of Congress's approach to crypto. There's bipartisan support, which I think will persist through this to regulate this market in a sensible way. So I'm actually optimistic in DC, but it will be important to see how that unfolds.
I had the opportunity, as a result of all of this, to have a conversation yesterday with Hester Peirce, the SEC commissioner, for about a half hour. I'm going to be playing a portion of the interview that I had with her on my radio show this weekend, which you can listen live around the country, and you can download the podcast at the TAFE, thetruthaboutyourfuture.com, which is thetruthaYF.com. And she was in agreement with all of the above, Matt, that she felt that Congress and the SEC itself, her own agency, have been moving far too slowly, and that this will likely serve as a catalyst to accelerate the level of regulatory clarity that is sadly needing. I mean, we know clearly what the rules are when it comes to stocks and bonds. We don't have similar rules in the world of crypto. And it is ridiculous considering the incredible size of this asset class, the fact that it's a globally trading 24/7 asset, that it's generating so much momentum. It is ridiculous that the regulators and legislators in Washington haven't figured this out yet. And so they're going to be a little bit embarrassed that on their watch, the lack of regulatory environment allowed this kind of company to engage in this kind of behavior for so many years, and how many others are doing it without us knowing it. What is that next shoe to drop? So I think that this will be the silver lining, and it's frankly a desperate effort to cite a silver lining in this mess, because it's not nearly what we can say, gee, I'm really glad we went through it kind of thing. This is pretty awful. And hopefully you're right. Let me give you a quick rundown of what is happening on the regulatory front around the world. Bahamas has already frozen FTX's assets. That's where SBF was based. Japan has suspended its operations. So has Australia. Here in the US, both the Department of Justice and the SEC are investigating FTX. They're looking at liquidity mismanagement. The CFTC is investigating whether FTX mishandled user funds, as you articulated, Matt, a moment ago. In Texas, the State Securities Board is examining FTX for its issuance of an unregistered securities offering, the FTX token, FTT. These questions are all going to include the crypto market's susceptibility to market manipulation, the role of offshore exchanges, cooperation with law enforcement, the role of exchange tokens, general consumer protection, leverage in crypto, and the handling of customer funds. Frankly, none of these should be issues. None of these should be questions. They certainly aren't in the stock market. Why are they in the crypto market? So the regulators are going to be all over this. We're also going to see congressional hearings. There's word that there's going to be a new digital assets subcommittee formed by the House Financial Services Committee. Emergency regulatory legislation is highly likely, and it will be most likely harsher than the bills that are currently in Congress right now. Senator Elizabeth Warren, Senator Lummis have all made commentary on this. McHenry, who's going to be the next chair of the House Financial Services Committee, he's issued a statement calling for the need for regulation. The new chair of the House Agricultural Committee is touting his proposed legislation. This is going to be pretty significant. It's still expected, we don't know for sure yet, but it's still expected that the Republicans are going to control the House. They aren't going to be as harsh on the crypto industry as the Democrats would have been. There are 5 Republican Senate elects who are very favorable to crypto, and 2 Democratic House elects who are very favorable. So we can expect, I think Matt, you're absolutely right, a lot of legislation and regulation, a lot of clarity. It's going to come faster than ever. Long term, that's good news. But in the meantime, it just adds to the uncertainty.
It certainly does. I would add 2 things on that. The fact that regulators are getting involved now tells you that they could have been involved earlier, right? The fact that all of these agencies are now doing hearings and investigations and suits shows that there actually are a robust set of crypto regulations already in place that could have protected investors in this instance. I think if you look at a company like Coinbase, which is a regulated US company, it's publicly traded, it has audited financials, it's been operating without issue for 10 years. I think that shows you what regulation can do. People trust Coinbase, not just because it's a well-run company, but because it sits on top of multiple regulatory licenses from every agency in the government that helps you internalized that trust, and because it has audited financials. The other thing I would note, it is important that McHenry may be the head of the House Financial Services Committee. He is one of the more informed members on crypto in Congress. And the key to crypto regulation right now is that it is informed. The risk of crypto regulation is if it is uninformed, if it comes from the sort of close your eyes ostrich corner of the anti-crypto wing. As long as it's balanced, the crypto industry should welcome this. You should want investors, when they put money on an exchange, to know that it will be there. You should want these exchanges not to be engaging in liquidity mismatches or being over levered. This will build trust in the system. So I'm pretty hopeful. I do think it'll be a harsher environment than it would have been a year ago. But quite frankly, at this point, crypto deserves it. And it needs to go through this fire if it wants to emerge into the industry that I think it can be on the other side of the spectrum, which is still, I would say, undiminished. And there's still huge positive catalysts there. But it needs to go through this period of fire.
Now, we've been, of course, emphasizing FTX in all of this. And of course, we do need to maintain the spotlight there. But to some degree, the spotlight is shifting over to another company called Binance. Mm-hmm. FTX was the second largest in the world crypto exchange. Binance is the largest in the world. And the reason the spotlight moved over to Binance is because for a moment, it appeared that they were going to bail out FTX, which they've rapidly decided they're not going to do. They are arch rivals in the marketplace. And the demise of FTX now clearly makes Binance the king of crypto on the global marketplace for exchanges. That, some argue, isn't necessarily a good thing. Binance itself is a controversial company operating overseas, outside of regulatory control by any nation. There have been accusations that the company has been engaging in illegal sanction violations, helping Iranian firms trade $8 billion over the past several years since 2018. Financial regulators around the world are issuing warnings that the company's been operating without a license, engaging in money laundering. Our own Justice Department is investigating Binance for that reason. So do you have any concern, Matt, that Binance will now be so dominant that we're going from out of the frying pan and into the fire?
Well, I'll say this, Rick, big picture, the US is the largest financial market in the world. We should have the largest crypto exchange in the world. And the reason we don't is we haven't gotten our regulatory act together to frame a spot crypto exchange or a derivatives crypto exchange that can truly grow and thrive. When we do, I think ultimately the largest crypto exchanges will be located here in the US, just like the largest stock exchanges are located here in the US, just like the largest options exchanges are located here in the US. We have missed an opportunity in this market, and as a result, we're putting investors at risk. I think, of course, there is risk around Binance. It is a somewhat shadowy organization that has hopped different geographies. It has stood the test of time. It does have a balance sheet. One interesting and positive thing that is happening in the unregulated parts of crypto over the last few days is that these centralized exchanges are being forced by their customers to do what's called proof of reserves, where you can point to the wallet addresses that the exchange owns so customers can actually see how much Bitcoin does it have, how much Ethereum does it have. It's almost like a direct version of audited financials. And you can do that on blockchain technology. I think it's 30 different centralized exchanges, including Binance, have taken steps to move towards proof of reserve. So the ecosystem will get better out of this. Binance will get better out of this. But is there risk in Binance? There's risk in all unregulated parts of crypto. There's risk in Binance. It's going to face more aggressive regulation. Their proof of reserves looks good. I think it's sound. But yeah, there's risk in all of those things. But I'd go back to the main point, which is it should be here in the U.S. It should be here in the U.S.
And if we are going to be continue to be the world's number one economy and the number one reserve currency for global finance, yeah, there's no excuse for us not to be. And I echo your sentiment. The saddest irony for me in this whole conversation, just from a timing perspective, is that just before this news broke, Solana had just ended its annual developer conference. They had over 3,600 developers gathering together to talk about the continued development of the Solana blockchain. And that was a 70% increase from a year ago, just to talk about the incredible continuation of the development of this ecosystem of the blockchain technology itself. Google just announced a major set of developer tools for Solana. This was all exciting. It was further evidence that the incredible innovation of it's progressing, despite the fact that Bitcoin has been in a crypto winter. Look how cool the development underlying all this is going. And then bam, that gets blown out of the water from the FTX news. And that's what I think is going to happen as a result, at least in the short term, Matt. People are taking their eye off the ball. They're focusing so intently on the price volatility, the regulatory uncertainty, and the drama of FTX's collapse that they're forgetting what's really happening in crypto, what's going on as a technological revolution. So elaborate on that a little bit for us, because maybe it'll make us feel a little bit better for a decade from now.
I think it's much sooner than a decade from now, Rick. I think it's a year from now, it's 2 years from now. What you're pointing out is exactly true. Look, here are some basic facts about crypto. More venture capital money has flown into crypto in the last year than in the entire rest of its history. More developers are working in crypto now, today, than at any point in its history. The number of people downloading Ethereum SDKs to do basic developments have 3x'd over the past year, even though we're in a bear market. It's something like 10x'd over the past 4 years. You mentioned the Solana Development Conference is much bigger. We're seeing more sort of proof of how this can impact the real world. JP Morgan just did a trade in crypto that settled on Matic and used a institutional version of Aave. Those are two DeFi protocols. As you look out a year from now and you think about an industry that has record amount of money in the venture capital space funding new companies, has record number of engineers working and developing applications, has a record number of blockchains that are increasing their throughput 100x, and has this potential for regulatory clarity, I think we get to a very significant next major upcycle in crypto. But you're absolutely right that people are going to miss these positive fundamentals in the wash of this short-term news and the wash of this uncertainty. But whatever fundamental metric you look at, users, revenue, developers, venture capital, activity, they are all up significantly over the past couple of years. And I think it's laying the groundwork for a really great bull market at the end of the tunnel, but for sure volatility before we get there.
So we have a rash of questions here, no surprise from, and a lot of these are really, really thoughtful. We'll try to tackle just as very many as we possibly can. One fundamental, and this is kind of a thematic set of questions that we've had from people in advance of the event, as well as typing in their questions live into the Q&A box. So keep on doing that, and I'll run through them as best we can. There's a thematic sense to some of these questions, Matt, regarding the price of Bitcoin, whether it's a floor. Is this still something you can legitimately recommend to somebody, and so on and so forth. So talk about your views on what this means from an investment perspective.
Yeah, I think the right way to think about Bitcoin specifically, and then maybe we can talk about Ethereum and other crypto assets, Rick. The right way to think about Bitcoin specifically is it's an asymmetric bet. Another way of saying that is that the price today is wrong. There's a world in the future where Bitcoin is a significant non-sovereign digital store of value. I believe in that world because the world is generally moving from an analog past to a digital future, and it is the established digital non-sovereign store of value. In that world, its market cap is not going to be $500 billion. There's $11 trillion of gold, there's $20 trillion of offshore wealth, money supply is $100 trillion. It's going to be some fraction of that. It may be a multiple of gold's market cap. And so one outcome for Bitcoin is it's worth not $15,000, but hundreds of thousands of dollars. Another outcome is that it doesn't turn out to work and is therefore worth zero or worth something approximately zero. There's a security hack, or maybe people entirely lose confidence in the space. It doesn't produce cash flows, so that would be catastrophic. There's a world where it goes to zero. What do you do with an asymmetric asset in a portfolio, Rick? You know what you do. You add a small allocation that if it goes to zero will not harm your long-term returns, but if it 20x's will significantly increase your portfolio outcome. That's as true today as it was pre-FTX. It's as true today as it was 3 years ago. And I think Bitcoin is in the process of moving toward that future. And that's what I would say about this. Is the right price level 15,000, 16,000, 14,000, 10,000, 20,000? It's hard to say that precisely. That's not the bet you should be making on Bitcoin. You should be making a 3 to 5 year bet or maybe a 3 to 10 year bet that it's going to be a version of digital gold, an international non-sovereign store of value, maybe a means of international payment. And if that becomes true, it's a multi-trillion-dollar asset class. So right size your portfolio. That's what I would say on Bitcoin.
And you said Ethereum is a little bit of a different conversation.
Well, Ethereum is a different conversation, right? The difference between Ethereum and Bitcoin, Ethereum doesn't produce cash flow, it has no revenue. I mean, Bitcoin. Ethereum is this global supercomputer network that people are building applications on, things like Uniswap, things like Aave, that tool JP Morgan used to buy a bond. And when you use that global supercomputer, you have to pay a fee in Ethereum. So Ethereum has revenues. Ethereum arguably has profits. It buys back Ethereum in the same way that Apple buys back its stock. You can look at Ethereum and say it's trading at 50 times ARR. And you can ask yourself, is that too much? Well, it's similar to what Adobe paid for Figma. Is it too little? That's the debate you can have with Ethereum. It's a much more fundamentals-based debate than Bitcoin, because Bitcoin doesn't produce cash flow. And as you move from Ethereum to Uniswap, to Aave, to some of these other protocols, they're really producing revenues and profits. And you can almost model them with traditional discounted cash flow modeling metrics. And so I like to separate those two because I think it's a fundamentally different question.
And Gary has asked, in the context of the allocation, you said, go ahead and invest, just make sure the amount of the investment is not going to hurt you if it fails. Well, it can materially help you if it succeeds. And that translates in what way you have spoken so many times in the past. And as you know, my view as well is low single digits. That's, for most people, that's what that means. 1 to 5% of the portfolio, and call it a day. Gary is asking, what if you had whatever it was 1%, 2%, 3%? Now with this debacle this week, it has fallen substantially. Do you invest to go back up to your original allocation? What makes sense? Gary wants to know.
Yeah, it's a great question. So we see investors doing both of these things. We see investors making a one-time, one-off bet that limits their downside and caps their upside. And we see investors who do rebalancing in the same way that they do for stocks and bonds. We've written a white paper on it. From our perspective, because we're inclined toward crypto, the data suggests on a historical basis that if you rebalance your crypto portfolio, you have very strong outcomes historically, with strong risk-adjusted return increases, with limited increases in volatility. So for many investors, rebalancing will be correct. You still have to think about position sizing, and you are putting more capital at risk. For other investors, they just want to make a one-off, one-time bet. I really think it comes down to your personal goals and outcome and risk tolerance between those two paradigms.
And it's a lot more than just Bitcoin and Ethereum, of course. So the two largest, I like to call them the Coke and Pepsi of crypto, but there's a lot more soft drinks out there. And so this question just came in. What about diversifying beyond those two coins? Of course, you have to love this question because that basically is a description of BITW.
That's right. That's what we do in our Bitwise 10 crypto index fund. We hold the 10 largest assets, importantly, screen for risks, and reconstitute every month. So it's always exposed to the 10 most important assets in the space. We do that because we don't know, will Ethereum outcompete Solana? Will Cosmos's new architecture be a huge winner? What will be the split between layer one and application valuations? We just want to make a bet that crypto will be more important in the future than it is today. Now, I did want to bring up those screens, Rick, because it's not like we buy just the 10 most popular assets on CoinMarketCap. You actually have to get down to asset 21 or 22 before you'll find the 10th asset we allocate to. As some examples, we never allocated to Luna, even though it became the 7th largest asset. We never allocated to Dogecoin, even though it was theoretically valued at like number 5. We never allocated to FTT, FTX's token. So we've managed to avoid some of the blowups in crypto with this screening risk, but absolutely to answer the question, you want to diversify. Look, this is a volatile market. It's an early stage market. We were reminded of that in a painful way over the last week. In volatile early stage markets, it's hard to know exactly what will be happening, but it's easy to know maybe generally what will happen over long periods of time.
We're getting a lot of questions of people still trying to get their heads around this FTX fiasco. One is the board of directors. Where were they? Who were they? Did they not oversee what was going on by Sam Bankman-Fried, who now some are calling Sam bankrupt fried. And so I mean, it doesn't take long for the jokes to come out of a disaster, right?
Right,
Um,
exactly.
so what was going on with the organizational supervision in this company?
Yeah, I think the answer to that is there was none, Rick. I mean, it is incredible the venture backers that SBF had at FTX, companies like Sequoia, companies like BlackRock, major institutions up and down the traditional finance and crypto chains, but they didn't have proper governance in place. I think that's easy to say in retrospect. You should remember that much of this venture capital was raised during the great bull market of 2020, 2021. And many people just wanted to make sure they had a bet on crypto, and SBF was on the cover of Fortune and Forbes. This is not the first time in the financial industry that we've seen a meteoric star rise and attract investor attention and investor capital without doing the due diligence. I mentioned at the top that in retrospect, there's so many red flags. No board of directors, a venture arm, a trading arm, and an exchange operating side by side, sponsoring NBA arenas. But during the run up, BlackRock didn't see that. Sequoia didn't see that. People were just jumping into the space.
I'm old enough to remember Barry Minkow and Z Best back in the 1980s, an 18-year-old kid who duped all of Wall Street, including the biggest auditing firms as well as the biggest Wall Street firms, into giving him tens of millions of dollars for a carpet cleaning business, a commercial carpet cleaning business that was completely fictitious. I mean, at one point he said he had the contract for a building in Denver that was so tall it never actually existed, and nobody bothered to verify it. He ended up in prison, but only after taking Wall Street for huge amounts of money and a major embarrassment. And this is just yet another illustration of that. CoinDesk recently, I think it was earlier today, maybe last night, put out another story on a description of the C-suite at FTX and quoted somebody anonymously as saying it's a gang of kids running this company. And what it comes down to is that has got to stop in the crypto community. We need adult supervision in the room. Companies like Fidelity, which runs Fidelity Digital Assets, companies that have pristine reputations that are being run by serious professionals who are well-versed in compliance and legal and risk management, who can provide the necessary oversight to help protect a company from its own arrogant founder. And as an arrogant founder myself, I can certainly understand the importance of having adult supervision around you to help you protect yourself from yourself. It's really important that we have the checks and balances in place. And I'm hoping that this is an opportunity for the adults in the financial services industry to step up and to basically say to the crypto gang that launched all of this over the past decade, it's time for you all to pack your bags and get out of the way. They now have serious money from millions and millions of investors, hundreds of millions of them around the world. We have major pension funds investing and endowment funds who are indirectly investing on behalf of those individual consumers. It isn't just a game anymore. It isn't just a toy anymore. We need to be behaving in a manner that is consistent with the way we behave in the stock market and the bond market. And we need the regulators to support all of this effort. So I'm hoping that the adults step up and contribute in a way that to date, maybe they haven't as much.
I absolutely agree with that. Now, I will say there are some stand-up companies that show up in crypto with full regulation and full boards and full supervision. I mentioned Coinbase at the top. I would think of things like Circle. I would think of companies like Anchorage that have national bank charters. Even companies like Bitwise, who have been around for 5 years through multiple bull and bear markets. But you're absolutely right. The adults need to be in the room, and investors need to ask those questions. Don't look for the slickest advertisement. FTX had a fantastic Super Bowl ad. Do you remember the Larry David ad? It was hilarious. Still one of the best ads ever created, but that is not a reason to choose a platform to custody your assets with. You need to look at regulation. You need to look at tenure. You need to look at domicile. You need to look at structure. And you have to be doing that due diligence before you invest. That's never been more important than it is today.
So Corey wants to know what happens to the account holders at FTX. Forget about the investors. The investors are wiped out. But what happens to you if you just had an account there, you used it to buy Bitcoin? What happens to them?
Yeah, I think you're going to be waiting for a long time for this to wind through bankruptcy procedures. Just this morning, as you mentioned, 130 FTX entities filed for bankruptcy. Sam Bankman-Fried stepped down. They actually hired the same gentleman who led the Enron bankruptcy unraveling to run FTX and run this process. But this takes many years. You're going to be waiting many years to get your hands on whatever money is left. I suspect there will be money left. I think an informative thing to look at, Rick, would be Mt. Gox, which imploded in 2014, and people are still waiting for that bankruptcy procedure to work through the system. Now, in their cases, they've actually done spectacularly well because they had Bitcoin in 2014 and they haven't been able to sell. So they're going to get their money back and then some. In this case, though, you have to be thinking not about weeks, not about months, but about years until you get to access that capital. And that is sad, that is harmful, that's a stain on the industry. It shouldn't have happened. This was criminally negligent fraud, or appears to be, but that's what people should expect.
You mentioned WorldCom, Enron. I have to, we look at Lehman and Bear Stearns. All of these names are being bandied about in the context of FTX. The good news is none of those companies resulted in the demise of the stock market, and the stock market's at all-time highs relative to the prices back when those debacles occurred. The bad news is that those debacles were incredibly disruptive. Millions of people lost billions of dollars. Here we are yet again with another scenario like this. It raises the question that Dean is asking: if this could happen to FTX, why should we trust any other custodian or exchange? Does this alter how we go about buying our crypto?
I think for some investors, it's going to want to make them custody it themselves. We think for more investors, it's going to make them look for regulated entities that have established track records that have been doing this for a while. It's important to note, Rick, you can custody crypto at Fidelity. You can custody crypto at Bank of New York Mellon. You can custody crypto with Coinbase Institutional, which is part of a $10 billion publicly traded company. So I think when you get into the regulated setting and not the offshore setting, and you get into these established gigantic names, the longest running bank in the United States history, I think there's a high degree of trust. I also think, as we think about how do we recover from this, I've been thinking about what milestones investors should look at in the coming months to see if we are recovering from this. And three really occur to me. I'd love to know what your thoughts are. I think over the next few months, you should be waiting to see if other shoes drop. We need a stretch of time. The first milestone will be the passage of 2 or 3 or 4 months where no other crypto entity declares bankruptcy or is found to be insolvent. That's the first milestone to look at. I think the next milestone will be that regulatory milestone. We need to see clearer regulations on CBDCs. We need to see clearer regulations on spot brokerages. We need to see clearer regulations for the crypto industry in general. And once we pass that milestone, I think that will check a box. And then the final milestone will when we see the fruits of the labor of these engineers and this venture capital money who are building new applications. And we start seeing crypto applications that we're all excited about. That's when we'll be in the new bull market. But I think investors should think about those 3 milestones: no new failures, regulation, and new apps.
I think we can definitely look forward to numbers 2 and 3. The no new failures is something we are never going to know if someone will fail tomorrow. But I agree with you that the absence of failures would be good to see. And that's more likely as time progresses and the price of Bitcoin rises and provides greater cushioning for the companies that are engaging in the space. I think also something else for people to watch is what happens to the price of Bitcoin as we begin to approach the next halvening. That's occurring in Q1 of 2024. Anywhere from 12 to 18 months from now, we're going to see this happen. Historically, that has always caused the price of Bitcoin to double in the months surrounding it. Will that happen again? The fact that it does happen would, to me, say everybody's paying attention to the fundamentals, the underlying technological development of the crypto environment, and they're focusing on that. If that doesn't happen, I think that will reflect that investors are unimpressed and they're still focusing perhaps on the wrong things. So I would add that as a fourth element of the halvening itself.
Yep, I love that. It's a great point.
And it's your notion of some very significant adults in the room already in play, which I love. You know, we do a lot of work with Fidelity Digital, and I'm very impressed with BNY Mellon. The fact that they are providing custody services is noteworthy. But the question that is coming up from several of our attendees today is the notion of using any custodian at all. I mean, fine, go ahead and use an exchange to buy your crypto, but once you buy it, should you go to your own cold wallet, get your own ledger device and store your own coins on your own cold wallet, stored in your own safe deposit box or home safe?
Yeah, I think there are people out there for whom that is a good decision. Those are people who have incredible security hygiene, who are technologically expert, who are comfortable keeping assets in a security box and being able to access them, are not going to lose their password, etc. I think that's a fraction of people, honestly. I think most people are going to be better served and actually have lower risk if they have it with a regulated US custodian who has insurance in place from a company like Lloyd's and has been in the market for multiple years, just because I think there's so much personal execution risk leaving a password on your phone and being SIM hacked, forgetting your password. I've heard too many sob stories in that direction. I think for many people, that will be the right decision if they have incredible security hygiene personally. But for others, a regulated US custodian with insurance in place will be a safer solution.
Well, frankly, the answer that I think is best of all is to treat crypto the same way that you treat stocks. I mean, most financial advisors are not trading individual stocks for their clients. They're buying funds, mutual fund, ETF, an SMA, a TAMP, a private placement, what have you, but they're buying a package of securities in a fund environment, some kind of package product, which is being provided to them by an institution, a fund manager of some sort. That institution is handling the custody for you. You don't have to deal with it at all. And I have to believe that that institution, whether it's a mutual fund company, an exchange firm, an SMA, TAMP, you name it, that their institutional level risk management, legal compliance, due diligence is going to be far more robust at selecting and monitoring that custodial relationship than you are individually. So I'm just a fan of saying, why are we buying Bitcoin on our own? Why don't we just buy the digital assets through the funds? Of course, that's exactly what Bitwise does. I know you'll love what I just said, but I mean, to me, it's just a no-brainer. Why are you trying to figure this out on your own? You don't do it in the stock market. Why are you doing it in the crypto market?
I think that's exactly right. And it takes teams and it takes works and it takes on-site due diligence and comprehensive reviews and legal representation and analyzing those documents. So I think that is a great example. And I think most people will end up there. Right now, people, are in shock. They're processing. But I do think when they get out of it, you're right. They'll want to do this the same way they do it with stocks. And that's why, Bitwise's count of advisor clients is the highest it's ever been. It's well north of 1,000. It grows every day. So advisors are finding their way to that.
Now, that raises a couple of questions that people have asked about Bitwise funds, because if you are not going to buy crypto directly because you don't trust the exchanges either to buy your crypto for you or to protect them in a secured case, and you're going to go to a fund, Robert's asking, well, what about the expense ratio, that you have at BITW and at others? So talk about the expense ratio of the fund, what you think the future of expense ratios is, because frankly, that is an issue that everybody's concerned about.
Yeah, crypto is a frontier market and the costs are higher than they are in the equity space. So at Bitwise, we have funds that range from 85 basis points up to 3% in terms of their annual expense ratio. All of those are all in fees. So there are no other fees outside of that. There's no performance level. Our general view is that crypto is an area where people want the best heart surgeon and not the cheapest heart surgeon. And so those fees allow us to engage with the leading institutional regulated custodians in the world, the leading tax accountants, the leading fund administrators, etc., the legal counsel. You can go on our site and see our partners for every fund, and they are gold plated all the way down. But we have a variety of price points for different investors in different types of vehicles. I suspect over time, Rick, those prices will go down. I suspect the biggest single catalyst to that will be the development of spot ETFs. I would love to see that. That would protect investors. It would drive prices down aggressively. We can't wait for that day. At Bitwise, we continue to push for it. But for now, it is more difficult and challenging to operate in this space and to work your way in a well-regulated format through the different parts of the regulatory ecosystem. And that's why you see those costs at between 85 and 300 basis points.
And related to that, Michael's asking, this is something we want to make sure we talk about, the premium discount feature that exists in BITW and all the grantor trusts that trade over the counter. BITW is trading at a discount. Talk about that and what advisors need to be paying attention to.
Yeah, absolutely. Because we can't have a spot Bitcoin ETF, us and other asset managers have provided access to our investments through OTCQX traded trusts. And those trade in ways similar to closed-end funds in that they can trade at significant premiums and significant differences. And those premiums and discounts can be volatile, and they can be volatile during periods of volatility. So at moments like today, you're likely to see those swing. We at Bitwise don't control those premiums and discounts. They're set by the market. We just try to make people understand that they are a feature of the product. For accredited investors, we offer private placements that don't have that feature, but have more paperwork burden that allow you to buy and sell at NAV. We also offer separately managed accounts. So it's really about which particular way do you want to gain exposure to the intellectual property of something like the Bitwise 10 crypto index. The OTCQX trusts do have this feature of premiums and discounts that you need to be aware of.
David's asking, relative to your comment just a moment ago about the Bitcoin ETF being kind of like the Holy Grail. We all want to see that. It's the ETF structure is everybody's favorite, lowest cost, greatest liquidity, total transparency. Everyone's familiar with it. It's simple and easy to fold into a portfolio and do your job with the rest of the portfolio of rebalancing and tax loss harvesting and fee debiting. Let's not forget that. But we haven't had a Bitcoin ETF approved as yet. Bitcoin has had many of its applications denied by the SEC. Dozens of other companies have had their applications denied as well. David's question is this: given what has happened this week with FTX, what does that do to the SEC's likelihood of approving a spot Bitcoin ETF? Does this accelerate it, make it more, something they need to do faster, because the sooner they do it, the sooner they give everybody a safe way to buy Bitcoin? Or does this kill the idea, saying there's no way Bitcoin's ready for prime time? Which is it, Matt?
I think it's neither of those. It certainly doesn't accelerate it. That would be a Pollyanna view. I think we're unlikely to get a Bitcoin ETF within the next year. What I think we will get is a way to regulate spot crypto markets. I think that's going to be the focus coming out of this FTX debacle. The reason that's important is that would set the stage for us to have a Bitcoin ETF, an Ethereum ETF, a crypto index ETF, etc. So I suspect this is a setback to the near-term prospects for a Bitcoin ETF. Washington is going to be digesting this risk and this blow up for a while. It will set the stage eventually for multiple different crypto asset ETFs, because I think it will lead toward the better regulation of the spot markets, which is the gating condition to have ETFs.
And as I always do whenever we talk, Matt, I want to make sure I disclose that I'm an investor in Bitwise. I also own several of Bitwise funds, including BITW, BITQ, and some of your other products. So make sure you're all aware of that. We have running short of time here. I just want to reiterate that this is an evolving situation. The news is coming out literally minute by minute with the FTX debacle. And some of the information that you have just seen Matt and I provide to you here today on Veterans Day may be out of date by the time you watch this, if you're watching the replay in the following week. So we encourage you, if you have questions that we haven't been able to answer for you to your ability, if you're watching the replay, I invite you to contact Matt directly, and you can do that. Let me bring up your email address. There it is right there, matt@bitwiseinvestments.com. Also, we had a question, Matt. You had mentioned earlier that you have just produced a thorough report on Bitcoin miners and their financial circumstances, how stable are they, et cetera. And that's the email that you can write. If you would like to get a copy of that, just email matt@bitwiseinvestments.com, and Matt will make sure his team sends you that info. And Matt, you'll be getting my request very shortly because I want to see that.
Absolutely.
And so, Matt, thank you very much for joining us on this conversation today. This is not something we were thinking we were ever going to have to talk about. It is shocking. It is upsetting. It is disconcerting. It is a black eye on crypto. We're going to have to see what happens next. The short term, as Matt said, is going to be volatile. The long term, we think, remains intact. And you have to decide if you've got the stomach to hang in there short term to survive the long term. Matt, any final comments you'd like to offer?
No, I think you got it there. Thanks for creating this opportunity. Thanks everyone for engaging on this. I think there's superficial reporting out there. I think we went at a greater depth, and I love that dichotomy between the short-term volatility and the long-term, which I think, if you look at the fundamentals, is stronger than ever. But we will have to get through this difficult period before we get to that other side. So thanks for having me, Rick.
And my thanks to Bitwise for making you available in such short notice, Matt, and dropping everything to do this so that we can remain nimble and get you the content that you need. We have another event coming up on Tuesday. It's November 15th on a similar subject. Does tech still belong in client portfolios? Crypto itself is going through a heck of a time, but frankly, so is technology stocks. So we're going to talk with Ryan McCormack, the ETF strategist at Invesco, on Tuesday, November 15th, 2 p.m. You can sign up for that now. And then we have another event in December, what to consider when contemplating crypto for client portfolios, with Paul Ma and Darby Nielsen from Fidelity. And this is the time for you to bone up on your skills about crypto. You need to obtain your certificate in blockchain and digital assets. The course is only $649. The price is rising at the end of the year. So lock in now. You don't have to finish the course by the end of the year, but if you enroll now, you'll get the low price. So I encourage you to do that. The first half of the course, all about the tech. The second half, all about practice management to help you build your business. And be sure to pick up a copy of my #1 bestseller, The Truth About Crypto, which, by the way, just won an award as one of the best books of the year by the Society of Business Journalists. And finally, my radio show starting in January is moving to a weekday podcast. You can be sure to download it wherever you get your podcasts. You can grab it as well at thetafe.com, where I give you every single day the info you need to serve your clients and build your practice. And if you want to reach me, here's how you do it. Happy to answer your questions and help you build your business. Let us know how we can be helpful to you and your organization. Thanks very much for joining us on this event. I look forward to seeing you at our next webinar. And again, thanks to Matt Hougan and Bitwise.